Hello there and welcome to the first day of yet another trading week. I'm Thomas Taplin and you're watching the Press Review. Forget the fundamentals and strap yourselves in for a chop fest. These were some of the words said by analysts at Citi whilst commenting on a potential US government shutdown, the latest event to concern the markets. Aside from the nightmare political situation Italian Prime Minister Enrico Letta finds himself in as he fends off a rebellion by some members of the disgraced ex-PM Silvio Berlusconi's political party, the big story making headlines this week is the possibility of the first US government shutdown since 1996, as the dollar hits lows it hasn't seen in months. This is all to do with a stalled agreement in Washington on how best to move forward with the country's budget. You could call it another political problem the markets don't like and don't want. Some Barclays analysts were recently quoted saying, "The combination of US and Italian political risks has eroded much of the positive sentiment seen after the Fed's decision to delay tapering 2 weeks ago." Assets often seen to help growth, such as Brent crude, have slipped, while sovereign debt and the Japanese yen are grabbing a haven status. If you add to this US equity futures pulling down global stock markets and a less than convincing Chinese manufacturing sector, it's no wonder analysts are expecting more volatility to come. However, this is normal for this time of year, according to some Citi analysts, who said it's month-end, quarter-end and financial half-year end, so whippy, unpredictable moves can be expected. But a government shutdown in the US won't help the trend of renewed growth in the country, as according to the president of the Committee for a Responsible Federal Budget, Mayor McGuinness, US citizens will experience higher tax bills, slower and fewer mortgage approvals, and delays in passport and visa processing as a result. The ripples created by such a shutdown could act as a sort of brake pedal on the economy, and seeing as markets have been paying such close attention to US monetary policy in recent months, the thought of an economy under strain once again will cause new concern in the markets over the country's fiscal and political stances. According to the FT, the all-world equity index is offloading 1.1%, while the S&P 500 futures point to the New York benchmark pulling back by 12 points to 1,680 on the last day of the quarter. Well, that's it for today's press review. Don't forget to check out my interview today with the chief economist of East Capital on what to expect post-recession in the Eurozone. But for now, goodbye.